Good morning. This is Larry Edelson for my Uncommon Wisdom weekly market video update for Thursday, February 3rd. Well, we're certainly seeing plenty of interesting news and developments in the fundamental background for the global economy and the United States economy, with the municipal debt crisis continuing to escalate here in the United States, and of course the crisis occurring in Cairo and in the Middle East. However, it's interesting to note that these fundamentals, while certainly very consistent with the longer term trends, are really not much having much of an impact on the short term trends, which remain solidly defined by the short term cycles and the technicals that I've been pointing out for you over the last week or so. They are causing some additional volatility, which is to be expected. However, there have been no changes in the shorter intermediate term trends. For instance, let's go right to gold. I'm going to call up the gold chart. As you can see from this chart, this is the decline I've been forecasting, which has occurred almost entirely and precisely on cue. We did get down to the 1307 level. We have started to bounce a little bit. A lot of people, a lot of investors and traders attribute that bounce to the crisis in the Middle East. However, gold was simply oversold at that point and was due for a bounce. We should see gold come into some kind of resistance right now around the 1337, 1348 level. It is possible that gold could spike above that level back as high as 1400. However, the downside in gold right now is not finished. I don't believe we will see the pullback in gold end until we get a solid test of the 1225 level or 1260 level at a minimum basis. And then, of course, I fully expect the next leg up in precious metals, gold in particular, will then really take off. But not until we get a successful support of that key support level that I just mentioned. Let's go on now and take a look at silver. Silver did decline down to just under $26 and has bounced quite sharply along with gold. However, I don't believe silver on this bounce, which is a normal bounce from its previous oversold conditions from just a few days ago, I don't think silver can get much above this level right in here, which is about 28.80, perhaps poke its head to about $29. If I'm wrong, silver could get up to the next level close to $30. I don't think that will happen, but just like gold, I do not expect silver to take off to the upside again until we get a solid test of support, which lies all the way down at the 25 level, even the 22.70 to $23 and change level. So there's going to be some volatility in here in these markets. A lot of it is technically based and forecasted by simple technical reasons. The fundamental backdrop, of course, is meshing with those short-term technicals and also meshing, as I said, on a long-term basis. The crisis in the Middle East, even if it sort of passes over the next week or so, will come back at some point in the future. I think we all know that. And certainly the municipal crisis in the United States, which will eventually, and I say later this year, become a sovereign or federal debt crisis, will certainly continue to contribute to the long-term trends that I've been speaking about on these videos and in my writings. Let's now take a look at the dollar index. The dollar index I find actually very interesting here. Despite the crisis in the Middle East, which tends to send international geopolitical crises, tend to send nervous investors into the US dollar in the past, and despite the ongoing festering and worsening problems with the European sovereign debt crisis, the dollar index, as you can see from this chart, and as a representative of the US dollar's international value, is not looking very good at all. In fact, the dollar index is now coming down to the bottom of this slightly uprising channel here. This is not a good sign that the dollar index even fell below this support level in here. It should have held this level and then rallied. However, the dollar is clearly a lot weaker than most investors and analysts expect. I believe the dollar index will probably test the 76.50 level. If that gives way, as I noted in my last video last week, really all heck could break loose in the dollar and we could see a crash in the dollar sooner than even I expected. So do keep your eyes on the dollar, and do keep in mind that when the dollar rallies, it's largely only rallying against the euro, and it is not rallying much at all against any of the other currencies such as the Swiss franc, Canadian, New Zealand, Aussie dollars, and of course the Asian currencies where the dollar remains very, very weak indeed. Okay, let's now go on to the Dow. Another very interesting market here. We have seen a sudden pullback in the Dow. However, I don't believe the real pullback is here just yet because of this formation up here, this rather flat top formation here, which was similar to this one and similar to this one back here again. You can see these are grinding higher types of formations that lead to spike higher. So I would not be surprised if we get one more try in the Dow to just above 12,000, around 12,045, maybe 12,100. But I repeat my warnings, you do not want to be heavily invested in the broad stock markets at this point because the next big move is going to be to the downside. Do not take that as meaning I am calling a crash. I am not. I am not bearish other than very short term on the Dow Industrials and the S&P 500. I do believe that after a correction of the big rally we've had out of the March 2009 lows, that the broad stock markets, and most importantly blue chip stocks in the Dow Industrials and blue chip stocks in the S&P 500, will continue higher into a new bull market, which will be driven by a mass exodus of capital out of the debt markets and the ongoing devaluation of the US dollar. So please keep that in mind for the long term. It is the key to your success, not only for the long term, but also into navigating the twists and turns on a short term and intermediate term basis. Till next week, this is Larry Edelson.